Assalamu alaikum. Good afternoon, everyone. On behalf of ADGM, allow me to welcome you all in Abu Dhabi Finance Week. It's a great pleasure to be moderating this session today with our esteemed panelists. If I may ask you please to give a brief introduction about yourselves and background and some of the company.
Certainly. So my name is Iqbal Khan. I'm the founding CEO of Fajr Capital, which is a private equity infrastructure investment firm, and our entire focus is on asset management, Sharia compliant, of course.
And to you, Mr. Mohammed.
Mohammed Chowdhury, I'm the CFO of our Capita, which is also alternative investment firm. We invest in private equity and real estate, mainly in the US and also in this region.
MashaAllah. To you, Mrs.
Luma Saqaf, Director for IMEA, UN Principles of Responsible Investment. PRI has 5,300 signatories across the globe, holding together 121 trillion in assets under management. So our hope is to be able to promote responsible investment across the globe, and we are trying to do more work in this region to help progress that.
Thank you.
My name is Khaldoon Haj Hassan. I'm the CEO of GFH Equities, which is a subsidiary of GFH, and we focus on in the alternative space.
It's a pleasure to have you all here. As we know, the industry has been seeing a significant growth and with a projection growth of nearly $4.9 trillion by 2025. Today, we will explore the market trends, opportunities, and challenges with the esteemed panelists. To begin, let's dive in the evolution of the demand of the Sharia-compliant products. As we know, the alternative investment space is particularly interesting as it offers varied opportunities for growth. Mohammed, I would turn this question to you. Can you start by giving an overview of our Capita and how do you see the demand for Sharia-compliant products evolving in the alternative investment space?
Okay, our Capita is actually one of the first alternative investment firms that was founded based on Sharia principles in 1997. And we've done approximately 30 billion worth of transactions, more than 100 different investments. And we were the first firm to do like a leveraged buyout transaction in the US. We worked with our lawyers and we got the finance from Bank of America using like a sale and leaseback transaction, which has become like a standard for the industry. We're one of the first to do like a venture capital fund in the US also. So we've been pioneers in those fields. What I'd say in terms of demand, obviously when we started, it was like a very nascent industry. We were the first to structure these products.
Back in the 70s, for sure.
Yeah. So our clients were sort of more people in their 50s, 60s, more mature investors. But I think there's a recent survey by Lombard Odier, which is like a Swiss private bank, and they're saying that more young people are more interested. So like people who are like 18 to 40, more than 90% of those people, especially the high net worth individuals, are investing in Sharia compliant products. So we're seeing the trend that young people are coming into this industry.
Interesting. To you, Mr. Iqbal, as Mr. Mohammed mentioned, there's definitely a trend. How do you believe these trends are currently shaping the ecosystem of Islamic asset management? And how can you see private equity particularly contributing to this growth and development?
Well, you know, the Islamic finance industry is primarily a C2B business. It was never a B2C business. The consumers demanded the product. And I think Islamic banks have done a fantastic job in democratizing financing. But now consumers are asking, as Mohammed mentioned, about democratizing wealth. And that can only be done through asset management, alternate assets. And if you look at the authenticity of Islamic finance, and I've been involved in this industry for a long time, the true authenticity of Islamic finance lies in asset management in a contract called the Mudaraba contract. And it is there that the future of Islamic finance lies, because governments can allocate capital in different asset classes, choose the best asset managers for VC, for SME, for infrastructure, private equity, and that will create an ecosystem which will not only create wealth, but fortify the whole Islamic economies.
Interesting. And to you, Mr. Khaldoon, from a GFH perspective, can you tell us more about the demand and whether there are specific areas your company is focusing on?
Absolutely. I mean, I guess in GFH Equity, our investment mandate is to do direct regional deals, and globally, we also have a mandate to look at opportunities as long as it's done with strategic and proven investors in different asset classes that we realize there's a demand for. There's a huge demand for Sharia compliant products in the region, and we do see that. But from our perspective, again, we are an active investor. We look at sourcing transactions where we can always add value to them. A very specific example is in the education space, which is, again, a sector that's very well liked by Shari'ah investors. Example is our education platform, Brightest Education, which had an investment mandate of acquiring and integrating independent K-12 schools spread across different geographies and curriculums, and extract the value that you would out of a platform that integrates all these schools. Since our investment, we've assembled a management team that was able to do that operationally, and we focused on quality and elevating the education quality within that platform. Again, what is very interesting is that as we focus on quality within that portfolio, we managed to reap the benefits successfully, whereby we eventually, throughout the journey, exited the portfolio recently. The results delighted us as it delivered in the promise for our investors, and it passed the torch to another reputed financial investor dedicated and focused on quality.
Very interesting. And with this niche segment, who would you consider your competitors nowadays for GFH?
I mean, most private equity investors in the region do look at education. I think it's a sector that is well liked because of its defensive nature. We see a lot of competitors, but we also equally see them as people or parties that we can collaborate on. So we're open-minded in that sense, in collaborating with other private equity players or investment institutions to do club deals and work collectively in terms of adding value to all these portfolio companies.
Of course. So with competition, of course, comes risks and challenges. And now that we've explored the growth trends, let's discuss the challenges and opportunities in a Sharia-compliant management. With today's volatile macroeconomic environment, there are both hurdles and opportunities. Again to you, Mr. Khaldoon. Yes. How do you perceive demand from Sharia-compliant investors for various asset classes and specific products in the current market?
Good question. I mean, in the current environment, we actually see a lot of demand for dividend-yielding products from our Sharia-compliant investors, demanding this profile with a low-risk appetite. And this is exactly the sweet spot of GFH. We always look to analyze global and regional trends to identify opportunities that fit in that criteria. A recent example is an investment that we've done in the shipping sector. Although the shipping sector, for most investors, they're apprehensive towards it because of preconceived notions or past experiences, we realize the demand-supply dynamics for that sector are interesting enough for us to actually invest alongside one of the most successful fund managers globally in building a diversified portfolio of shipping vessels. Interestingly enough, when you look at different shipping subsectors, there is not a lot of correlation between them, and hence the diversification. So that has worked very well with us, and it had a lot of demand from Sharia-compliant investors. Again, other products or other sectors that these investors like are, again, healthcare, education, logistics, and data centers, all of which we're pursuing, and we are in the advanced stages in terms of finalizing something within data centers. Another interesting trend that we've seen with our investors is that we given our relatively big platform of products, we always try to provide our investors regular liquidity events whereby they can actually exit or decrease their exposure from one of our products to other products, and that is something that we've seen appreciated quite a bit by our investor community.
Mr. Mohammed, as you mentioned, you've recently launched the venture capital asset management. Can you speak more about the associated risk and how did our Capita actually navigate through such landscape?
Yeah, we've invested in a fintech portfolio about 2 years ago, and we're in the process of investing in a more AI-type investment portfolio at the moment. For us, obviously, Sharia compliance is the most important thing that we assess. So just to give you an example, we're investing in a company called Sandbox. I think some people might have heard about it. It came out of Google and Alphabet. So that company we saw had US military as a major customer, for example, or big investment banks like Barclays. So we had to assess exactly what they were doing. So it turned out for the US military, they were provided an alternative to the GPS system. Because Israel, for example, jams GPS if you're flying over their territory, or Russia in Ukraine, etc., which is very dangerous for an aircraft. So we assessed that and we said, yeah, that's not a Sharia compliant issue. And this company does quantum data analysis. So Barclays is not involved in the lending or charging interest, for example. So that's how we assess that portfolio, to assess that type of risk for that portfolio.
Interesting. Mr. Iqbal, that we've heard about how our Capita navigated through their challenges. Can we know what strategies, from your experience, do you have in place for the asset management industry to adapt and navigate through the volatility of such market?
So I think the first thing is that you have to invest in what you know,
yes,
and where you know, and with whom you know. And with whom you know becomes the most important thing. You invest behind founders and behind management. The Islamic concept of musharaka, partnership, means that the asset manager has to partner with management in the underlying businesses. We have oil services business, we have school businesses, we've just deployed $1 billion in healthcare. These are very, very technically very different businesses. So you need to have partnership with the management. That's the first tool for reduction. But also you invest into focus countries. I mean, our entire focus is the GCC. And you invest into good to better platforms. We don't do turnaround because turnaround take a long time to turn, if they turn. But what we also don't do is startups. But through this current fund which we have. So these things help us to navigate ourselves and manage the business risks inherent in investing into these spaces. But also investing in defensible sectors, education, healthcare, facilities management, data centers, and semiconductors, those kind of investments.
So we can say that the Sharia principle-based investments are ethically and socially responsible.
Indeed, indeed they are. And Sharia-based principles guide us and navigate us towards what is called the value creation paradigm. Every time you invest, you ask yourself, is value being created as defined in the Sharia? Is this, and there is this Quranic concept called yanfa'un nas, that which is good for mankind. If it is good for mankind, then 100% it will be Sharia compliant.
Thank you. To you, Mrs. Luma, the subject matter expert in responsible investment, how do you see any alignment or resemblance between ESG principles and Sharia principles?
I mean, this is the question that comes up on a daily basis, I guess. Look, I think if we step back, there is for a lot of people, they see already the alignment, but they're confused by, are they truly aligned in what way? So The simplest thing, when you think of Sharia, we have the basic, what we call the screening list, the negative screening list, the things that you should not invest in. And when you look at those, we are talking about things that are typically good for, when you avoid them, they're good for society. So you're avoiding alcohol, you are avoiding arms embargo. We're talking about, for example, smoking. There are a lot of issues that are typically avoided by Sharia investments. Now, they are all socially related if you look at why they have been introduced, because how Islam as a religion looks at social issues. And the question becomes, so how does that relate to ESG? And I mean, when you look at from an investment policy perspective, for example, if you look at the definitions of investment policies on the PRIs, negative screening is an investment policy. So you are already a responsible investor if you are Sharia compliant. So why are we asking this question? The question becomes in that today, climate is the biggest, loudest voice in the room. And you're not directly able to relate the social issues that Islam is dealing with that. That is one thing. The other thing is that impact. What Islamic finance has done always is the negative screening, but without being able to measure the kind of impact we're creating. So we talk about the social issues, but we have never sat down to measure how we're creating them, and therefore the S in the ESG is sometimes confusing. So I go back to saying the S is there in Sharia-compliant products, but we need to start looking at the impact where, now when we start looking at the new investments and how they have to comply with environmental issues, look at ESG screening rather than just Sharia screening, then we are moving into a new era, if you like, of Islamic finance.
And how do you think asset managers can help actually promote the commonalities between ESG and Sharia principles to attract a wider investor base?
As I said, I mean, it's already there. It's already there in terms of the basis of it. But what is happening is that when you look at the product side, what is actually we're investing in, that's where we have more issues. So again, conceptually, you should be able to tick all the boxes. But if you want to attract a bigger audience of investors, we've stepped now from Sharia-looking investors because they're already there looking for this type of investment. So if you want to expand it, then you have to start looking at, as I said, at impact, at what kind of impact the investors are looking for from an ESG perspective. But there's also the layer of the assets, the underlying assets in all of these funds, for example, and whether to what extent they are going to be prohibitive or expanding the sphere. What do I mean? If you are investing in, let's say, equities, the equities from a Sharia perspective, still in addition to the negative list, you still have to comply with a number of other Sharia aspects, like how much debt that company can have, what type of debt it can have, what kind of the percentage of prohibited activities. So that is an additional layer. In theory, it could limit, therefore, the universe of the assets you could invest in, and therefore limit the type of investors who could come in. Having said that, from what we're seeing and the discussion we're having and the two discussions before that, you can see that there's already a significant amount of interest and demand in Islamic funds. And I actually have a few numbers here that were very interesting. This year, 2024, ESG Islamic funds grew 19% during the first half of this year, reaching 9.5 billion in assets under management, and outperforming overall Islamic funds. So these are the combined. They've achieved 90%, but there's also the issue of yield. It has already been proven that there is more yield or more returns to be had, and LSEG, who are not in the room, this is their research, that several market studies have shown that equities with higher ESG scores tend to produce superior returns, and so on. So there's already a build for all of that, and I'll stop here because I can go on forever.
Certainly, there is demand and there is market growth. To finalize the session, I just would like to hear from our asset managers given the interest in fintech and the demand in cryptocurrencies, how do you personally view cryptocurrencies and Shari'ah investment? Starting with you, Mr. Iqbal.
Well, I'm not a big fan of the cryptos because you can't quantify and you can't define their impact. There's too much of a speculative element built in there. But the underlying technologies like blockchain and like other things can certainly be used in building up a portfolio. But where I see the big opportunity for Islamic finance is in the payment processing space. You find that the banks are farming out their digital payment processing to wholly owned subsidiaries, and they are inviting capital. So that is a very big opportunity for investment for Islamic finance. As we move from analog economies to a digital economy, today most of the GCC, 30% of the transactions are done digitally, 70% is still cash. I think in 5 years' time, it will be the opposite. 70% digital, 30% cash. So that's a big opportunity in my view.
So you believe in the technology itself, but not the cryptocurrency.
That's my view, but I'm a very conservative investor.
And Mr. Mohammed, this morning you just shared the percentage. You said 40% of the UAE residents actually use cryptocurrencies. What is your opinion on that?
Yeah, I think the boat has sailed. Cryptocurrency is here to stay because people are accepting it as a means of exchange and store of value. Whether we like it or not, we have to adapt and get used to currencies like Bitcoin that are here to stay, I think.
Thank you. Mr. Khaldun, your view?
I'll probably tend to agree with Iqbal in terms of I'm not a big fan of cryptocurrency.
It's a double-edged sword, as they say.
I definitely appreciate the technology on which it's built, and that's a breakthrough technology in terms of making sure that you replace intermediaries when you have to deal with across the internet, and that given the trustworthy nature of that technology. But in terms of the currency itself, despite the recent jump in the currency of cryptos, we've shied away from that segment due to its speculative nature and high risk profile. It could be very high returns, but at the end of the day, you're taking also very high risks in the process. We'd rather focus on the digital banking. That's an area that we are very keen to invest in. But again, not looking at early stages, we're looking at profitable, mature platforms.
Mrs. Luma, to finalize this session, now that we've heard the Shari'ah principles, ESG factors, and cryptocurrencies convergence to create an ethical and innovation investment opportunities, do you think there's a rise? Can we combine these three frameworks together? Do you think there's opportunity more or a challenge more?
You've probably heard part of the answer here. Look, I think in crypto, in any Islamic product, there are three levels, if you like. There is partly the negative screening, there is structuring the product itself, that it is Sharia compliant. And then we have here, when you add ethical and ESG nature, then we are also talking about governance issues. We are talking about pure ethical issues, where the money, the underlying comes from. Crypto, I have seen it approved by some scholars in certain circumstances, but I think we're not there yet where we are all certainly clear on it. So I don't know if the three frameworks converge fully today. There's some level, but I think we have a long way to go to get comfortable on the ethical side.
Thank you very much. I think we're out of time. I just want to thank you all for this enlightening discussion and the intersection of Sharia principles, ESG values, and asset classes continue to evolve, and we've barely scratched the surface. Thank you to our panelists and esteemed guests. Looking forward to continuing these conversations. Thank you very much.
Thank you.